Tonight at 6, a Call 6 investigates consumer warning about a growing problem for car buyers in Indiana. It is called yo-yo car sales. And the experts say the practice can leave you without a car and without a big chunk of money. Call 6 investigates. Kara Kinney is working for you to find out how you can protect your hard-earned money.
Yo-yos are supposed to be a fun toy, but when you're buying a car, it can mean something totally different. Essentially, you take the car home. The dealer calls and says you need to bring it back. The financing fell through. Bobby Gridley wanted a nicer looking vehicle.
Just wanted something bigger for the family and found a post on Facebook. It was a dealership, so I was like, you can't go wrong here.
Bobby found this Lincoln at the original used car factory in Noblesville. On January 23rd, she put down $1,000, signed a contract, and left with her Lincoln. Things started getting weird when she called the finance company.
I turned around and called them again on that Monday, and they can't find my account.
And then even weirder.
They called me back from the dealership saying your finance fell through.
Bobby says the dealer took the Lincoln back, but kept her $1,000 down payment, calling it a rental fee.
And I'm like, this isn't a rental fee. This was my down payment on a loan you promised me, and now all of a sudden the loan's not there.
Driving off with a car before financing is complete is called a spot delivery. A lot of dealers do it, and the Indiana Secretary of State's office says it's perfectly legal. But consumer law experts say it opens the door for people to be yo-yoed, where the car goes out and comes right back because they haven't secured financing through the outside lender.
Hopefully that the deal goes through, and then if it doesn't, they yank them back like a yo-yo.
Consumer law attorney Andrew Alt is a member of the National Association of Consumer Advocates. He explains some dealers want to string you along.
They want the down payment, they want the trade-in, and they want the customer.
Alt has successfully sued multiple Indianapolis car dealers for the practice. He says it can be a violation of truth in lending laws and the Indiana Deceptive Consumer Sales Act. And just last year, the Federal Trade Commission settled with the California Auto Group over yo-yo sales. The company agreed to pay $3.6 million for using deceptive and unfair sales and financing practices. Alt says in Indiana, oftentimes when consumers do bring the car back, they're offered another deal on a different car with worse financial terms. How would you describe this practice?
It's highly abusive.
Bobby Gridley filed a complaint with the Better Business Bureau, but the BBB says the original used car factory never responded. So we went to the address in Noblesville, and we found a totally different dealership in its place. That place does not exist anymore? No. Records show the Secretary of State's office suspended the original used car factory in April for expired insurance. We tried cell phone numbers for its managers, but no luck. As for Bobby Gridley, she ended up going to another dealership to get this car. She wants other consumers to know about yo-yo car sales so they don't get strung along.
That's bad business practice. It needs to be stopped.
Here's how to protect yourself. Pay for your car with cash or get financing through your own bank or credit union. Read everything before you sign it. And lastly, don't drive your car off the lot until financing is final. Kara Kinney, RTV6.